has in a trustee relationship with regard to the execution of transaction, with regard to the fair and equitable treatment, with regard to justice and equity, in line with the contractual arrangements, etc. For all these things, you need to have some sort of assurance. And that assurance comes first through our internal good governance mechanism, that is a proper Sharia governance mechanism on which we have multiple Sharia governance standards. But additionally, it involves some sort of third-party certification. Now, building reliance on Islamic finance, that number one, it is really Islamic, it is really Sharia compliant. And number two, it is feasible and viable. It is able to provide good returns. It is being managed in a professional manner. It is managed by the parties who are fulfilling their fiduciary and trustee responsibilities in a good manner. This is this building, it is a very important part of building reliance. For sure, the external audit, then external Sharia audit, then the supervision mechanisms applied by the regulators in form of off-site and on-site surveillance and inspections. Is still, there has to be a little bit form of third-party assurance in addition to that. For sure, we have already come up with a Sharia audit standard, but still, is there a need of rating? The question is, why a rating, credit rating, is required on the conventional side, even if we can see that, Islamic, that there is an external audit in a normal bank, but still there is a rating involved. So what is the difference between the audit and the rating? That also needs to be understood. We need to understand that the audit and rating have some of the things in common, but there are some differences. So first fundamental difference is that audit is about saying yes or no, providing a reasonable assurance that the institution has followed presented the financial statements in the appropriate manner in accordance with the right set of accounting principles. Same applies to external Sharia audit, that the entity has complied in the given period of time with Sharia principles and rules. And obviously, audit is most of the time more detailed than rating. So, but the rating has a relative effect. Means that the rating identifies that it is not only about yes or no. It is about a relative scale, that if it is doing good, then are all the banks doing equally good? Or if some of the banks are doing better than others, even if they all may have clean audit reports, meaning that the audit itself can provide answer in form of yes and no, and an institution meeting the minimum criteria will still have a yes. And at times there can be some different type of audit qualifications that may not be impacting the investment decisions in that way. While the rating provides, based on a scale or based on a criteria, the relative position of the institutions. The second part is that audit is on past data only, while rating supports doing business with that institution for future. So rating has a future outlook as well. So while audit is more focused on what happened till now, rating will also consider about what the outlook is, how the things are expected to change, and this point forward, how things work. Sorry, I'm taking a bit of time, but I think it's very important to just understand the rationale for this standard. So coming up with this, AAOIFI started evaluating the need for Sharia compliance and fiduciary rating. And when I say that Sharia compliance and fiduciary rating, I need to explain one more thing here before I go to the project details. The second part is that if I go to a conventional bank and I put my money there, I have a promise from the bank that they will return my money after the due period with an interest amount. This is the simple transaction with a conventional bank. So when I pay that money to the conventional bank and invest with them in form of an interest-bearing deposit, what I'm concerned with? Primarily, I am concerned with the credit worthiness of the bank. And I'm less concerned with how that money is being used by the institution. So even if there is a risk that the institution does not pay the money and use the money properly, still, if the credit worthiness of the bank is good, and I am sure that they will be able to pay back my deposit along with interest thereon, I might still be okay with doing transaction with them. But when I go to an Islamic bank and I invest money with them and they say that we expect that your expected profit will be this much based on the investments that we make in a pool of underlying assets under a mudarba basis or at times wakala basis, we expect that this would be your return. Now I'm concerned about two things. I'm a Sharia conscious investor or stakeholder, so I'm concerned about two things. I'm concerned about whether or not the returns that I earn are halal. Meaning that if those returns are not halal, then they don't mean anything for me because I'm a Sharia conscious stakeholder. So for me, it's not only enough that you give me returns, it is also equally important for me that you give me halal returns. For me, being a Sharia conscious user of financial statements, of a Sharia conscious investor, a Sharia conscious depositor or customer, it is equally important that money remains halal. And if it is not halal, then I may have to give up all of it in charity. Which means that Sharia compliance may have a veto effect on my investment decision, or it may have a nullifying effect on my income, that whole of the income goes to charity. The second part is that since it is not a guaranteed capital, not a guaranteed return on capital, that is the investment itself and the profit, both are not guaranteed. Profit may become volatile and even the investment may go into a loss if the underlying assets generate a loss. So in that situation, what I need to do is that I need to assess whether or not the institution with whom I am investing the money has the right set of principles to ensure that it is fulfilling its fiduciary responsibilities towards my amounts. And most of the Islamic finance, although even the conventional institutions have the fiduciary responsibility, I'm not saying that it is not there, but still this is becoming more important. Let's go on the customer side. I'm a customer. You are a conventional bank. I come to you. I say I need $1 million for loan. You said, okay, Umar, what is your capability to pay me back that money? I say, oh, I have a credit worthiness record. I have a good credit record. I have no significant credits. I'm not leveraged. I have this much cash flow out of which I'll be able to pay you back. And in addition to that, I give you this much security. Now, considering all these factors, they will see how much is my capability to pay, and secondly, how much is their capability to get, in case of my default, get money through the securities. And if it is all okay, then they will be giving me loan, even if they are not fully convinced about my investment capability, if they are convinced about the security, which is strong. But the same thing, if you apply in Islamic finance, the strength of the security at times does not matter, because in case of a genuine loss, you are entitled to get the return on to actual return only, which may be a loss situation. Even if a security is available, the security can be used only if I am proven negligent. Considering these factors, the Sharia compliance and fiduciary responsibility, because of the very nature of an Islamic financial institution, becomes strong. So this project that we are talking about is about having Sharia compliance fiduciary rating for institutions as well as instruments. The first part was about the institutions standard that is already complete. The second part we are now completing it. We have already held, I think, 2 public hearings on this one. This is probably the third, after which 1 public hearing in English will be conducted, and maybe a roundtable also on this one of the regulators and some experts from the rating agencies, and then we'll try to finalize. But we expect, inshallah, that by end of this year, this will be done. First, we are thankful, and we need to praise our brothers and sisters from International Islamic Rating Agency, who have been instrumental in developing this with us, providing us all the technical support that was needed. And they are probably the first one to actually offer this service in the market. So we were actually able to learn a lot from their experience when they supported us in developing this standard. So I would like to thank them. I would like to also thank the Bahrain Association of Banks for partnering with us in this event, and other working group members who have been representing some of the rating agencies or have past experience with the rating agencies and have been good experience on the governance side. So thanks to all of them that we are now reaching the conclusion of the project. This standard is the second standard in the project, so a lot of things are not repeated in this standard. It means that some of the quality assurance requirements, agency-related requirements, these are not repeated and are referred to the first standard, which is already in place. I can see a question in the Q&A tab. Okay, I just a hi, so assalamu alaikum and welcome. Okay, now I'll take you through the standard, and we'll start taking the comments. So this is, if I hope you are able to see my screen now.
Yes.
Okay, thank you. Okay, one thing that is like everybody asked towards the end, this is just some presentation of the original exposure draft of the standard in a presentation format. So this version is normally not shared, and we have already shared with you the link for the exposure draft. Most of you might have read it already, but those who have not read the exposure draft, they have the link in the chat window, I believe. They can access that. And towards the we request that maybe within within 3 to 4 weeks of this meeting, we'll prefer to have all the public hearing comments received and the comments in writing received, so that we can move towards finalization of the standard. As I have taken you through the brief about the project, its rationale, its need. So I have actually, I'll actually be skipping the preface and introduction part, and we'll come to the body text of the standard. Objectives of the standard, I'll read out the important things for you. Objective of the standard are as follows: introduce and set out principle-based guidance on Sharia compliance and fiduciary ratings of Sukuk and other Islamic finance instruments, strengthen stakeholders' confidence in the Islamic finance industry and the Islamic capital markets, and improve transparency and demonstrate the compliance of Sukuk and other Islamic finance instruments with the standards, regulations, and best practices related to Sharia principles and rules, Sharia governance, adherence to values, and fiduciary responsibilities. Sister Alia, just make a note of it, and no comma before end, just consistency in the writing style. Scope. This standard applies to, in a nutshell, let me mention, this standard applies to the rating agencies, not to the institutions or institutions or the bodies that are actually issuing the Sukuk. Or for Sukuk, we have a Sukuk governance standard GS12 already in place. So a lot of the governance requirements which are already contained in that standard are to be covered in addition to the financial reporting and disclosure and transparency related requirements, which are contained in our accounting standards. So this standard applies to share compliance and fiduciary rating engagements conducted by independent rating agencies to provide various stakeholders an independent, comparable assessment-based rating or scoring on state of Sukuk and other Islamic finance instruments, Sharia compliance, and adherence to fiduciary responsibilities by the originator and other organs of governance, including, where applicable, the trustees and the service agent. Sister Alia, just make a note of it. On a state of Sukuk, there should be apostrophe S here. Okay. Then, for the purpose of the standard, the assessment shall be performed primarily at the Sukuks and other Islamic financial instruments level. However, considering the nature of the instrument, an assessment of the relevant functions of the originator and service provider or trustee may also become necessary in line with the requirements of the standard. Now, mainly it applies to Sukuk, investment management instruments like RIA, unrestricted investment accounts, URIA or class of URIA or a similar instrument, etc., like certificates of Musharaka, etc. Even Wakala-based instruments can be subject to that. That is like, any type of these. So any other Islamic finance products or instrument or product offered publicly by IFRS as a liability, quasi-equity or asset product. Just to clarify one thing, while we understand that the maximum use of this standard is going to be for Sukuk, but we understand that there are other type of instruments as well where it might be needed. So I'll quickly try to explain. Like, for example, there can be a liability product. Again, Islamic liability products may have their own, structures as in line with Sharia. But they may also be subject to a rating like this. Even it can be a a transaction structure that is resulting in form of a liability. So, for example, if it's a salam-based structure that results in form of a liability, it can be a reverse murabaha or commodity murabaha-based arrangement. Although AAOIFI Sharia standards do not consider tawarruq or reverse murabaha to be a normal source of getting funding, but in the market these practices are there, so you can find some of those like instruments. Quasi-equity instruments include like URIA and others as per AAOIFI's definition, and the asset products may also be applicable. Like every now and then, let me give you an example that every now and then, sitting here at AAOIFI, I'm asked by some of my friends sitting in Australia, Germany, and Canada and US. They ask, okay, which instrument of housing finance is Sharia compliant here? Sitting here at AAOIFI in Bahrain, I cannot respond to them. I do not have any means to, I won't say reasons, it should be means to establish which one is better and which one is not. So in some of the markets, even the Sharia compliance and fiduciary rating of the asset products becomes important. And while the detailed parameters that apply on asset would be different from those which apply on equity and liability and quasi-equity products, but still the overall mechanism of doing the exercise of rating would be the same. So we decided to keep it covered within this single standard. So we similarly, while we have already issued a standard on instruments, but if, for example, if they're in an Islamic financial institution that has a B rating for any reasons, but they still maintain good controls on some of the products which are publicly offered. So, for example, they can still have a restricted investment account which is A or AA or AAA rated. I'm just giving you example again. The rating A, B, C, or in form of a score like 90% plus or 80% plus. These are the things that are to be decided by the rating agency. They will have their own rating scale or their scoring scale. But I'm just giving it as an example that I may be running an institution that has a rating which is less than what I expected, but with regard to some of the products that I offer to public, I can still have a good rating. So, or I can create, if my overall rating is not that good, still I can create a product portfolio that has a better rating in order to attract some of the classes of the customers or in order to cope with the peer pressures. Please feel free to put any questions and comments that you have in the Q&A tab. After every section, I'll try to stop and take comments. Okay, just I saw one of the comment coming in, and it's a very detailed comment. This is from Sister Amanda Metikazela. My apologies if I don't pronounce it very well. So Sister Amanda has a comment. Good morning. Good morning to you. Para 3, the second sentence states the nature of instrument determines whether the assessment is based on instrument or institution level. Which instrument should not require the assessment of the functions of the originator? It seems like the benchmark parameters, the ethics value of the originator are considered are applicable to all 4 types of the instrument. The importance might vary, but it seems the parameters are applicable. Can a rating agency choose to exclude any of the parameters based on applying the suitability paragraph? Pardon me, I note we have not gotten to suitability paragraph, but I think my question above might be answered if the rating agency has discretion on which parameters to follow. Maybe also consider replacing phrases of nature of instrument with type of instrument, so just so that we are consistent throughout the standard. Number 1, excellent comments. Thank you very much. Excellent comment and excellent question. And as you mentioned yourself, we have not reached that place. So some of the things might be, I may answer, but maybe like all the parchment might not be on the same page. So I'll keep your comment open, and I'll come back to it. Thanks for raising this comment and question. With regard to the second comment that we also consider replacing phrase as reference of nature of instrument with type of instrument. Thank you very much for a good comment. Sister Alia, please make a note of it for consistency purposes. We need to see, unless the context is different, which I don't believe so. So in that situation, we need to follow the type of instrument or nature of instrument thing on a consistent way. Thank you very much, Sister Amanda. We'll come back to this point because some of the parchments may be blank on this. So just please allow me some time on that. Then we have Deeq Omar Khalif. Does the Sharia compliance and fiduciary ratings of Sukuk and and other Islamic finance instruments apply to the UK banks, or it is for Islamic banks only? Does Islamic banks use different credit rating agencies in different countries? There are 2 questions. The first thing is, obviously, as of now, it is not legally applicable anywhere. And most of the parts of the world, legal applicable requirement is the credit rating. So the credit rating is even being done by Islamic banks around the globe. But we believe that some of the markets where Islamic finance is a niche and those are predominantly non-Muslim countries, or at times Muslim countries, but with a secular constitution, etc., where they cannot come up with a full, Sharia compliance-based mechanism, institutions. In some of those situations, Islamic finance, for Islamic finance, it becomes more important that the products are rated. So I was giving you example of people, my friends asking from Australia and Canada. For me, this is more important in some of those markets, particularly for the asset product. But for the overall institution, we have recommended, the institution's standard highly recommends that all Islamic financial institutions around the globe should have Sharia compliance and fiduciary rating. So it is AAOIFI's recommendation as a part of good governance mechanism that it should be there, but it is not mandatory. Even it is not mandatory by AAOIFI, and it is not yet mandatory by the regulators. So even those regulators who adopt our standards have not made it mandatory. So, and obviously we in the standard itself said that it is recommended. So right now we know that International Islamic Rating Agency has already worked on it with multiple institutions in large numbers. Still, I believe that the number of ratings that they have done has given us good experience with regard to this thing, and it is taking us towards understanding the benefits of this. We have not, made an effort as of now to convince the regulators. One thing is important, that if you ask me, for me, it will be as soon as it comes into, into effect after the effective date of this standard. For me, Sharia compliance and fiduciary rating for Sukuk would be even more important, and particularly retail Sukuk would be even more important. Because, for example, if I have a retail Sukuk from a government versus an investment account with a bank. So in an Islamic bank, when I go and I have an investment account, I'm quite even if there is no Sharia compliance and fiduciary rating, at least a confidence level is there that this bank is subject to some Sharia governance regulations. There is a Sharia board, there is active sort of functions, at least some sort of Sharia governance framework exists. But when I go to a government retail Sukuk, my personal concerns are much more as a Sharia conscious investor. Honestly, I don't have any idea at all if the government is applying any sort of Sharia compliance controls on that Sukuk and the assets underlying that. So at times, some of these things will become more important. So I believe I have answered both of your questions, that this one applies right now, not a mandatory basis. Its significance depends on the products and the markets. And as of now, the credit rating agencies are doing functions in different countries for Islamic banks also, and they are mainly assessing the credit, not the fiduciary part. There is a comment from Brother Sadaqat Khan. Assalamu alaikum and welcome, Brother Sadaqat Khan. Your presence is always encouraging for us. Who will certify that the independent rating agency really applied the rating agencies and process appropriately or truly, AAOIFI or regulators? As of now, the rating agencies are sort of like, kings in their area. Even in the credit rating, the auditors are subject to very strict quality assurance requirements. I was in EY before joining AAOIFI, and we were subject to quality assurance by the accounting profession regulators in my country. They used to conduct our quality assurance on a periodic basis. We were subject to the global quality assurance because the global practices of EY were actually subject to quality assurance at global level in different countries. So even all the EY entities and EY partners were subject to quality assurance requirement on periodic basis. And then the work that was done by us was always subject to recheck and reassurance by the Securities Commission and the central bank. So we were always on our foot to make sure that the top quality, according to the name of my institution and my firm, and according to the personal professional prestige, I need to maintain it all the time. For the rating agencies, obviously the minimum requirements are there for the regulators for enrollment of them, but the quality assurance requirements at global level are still not that strong. Not only this, as we will go through this standard, you will see that in the rating, actually, the standards are not that much there, even in the conventional side. So they are actually the methodology part and the evaluation related scoring and rating approach part. Most of the things are quite open for the credit rating agencies. By saying this, I'm not saying that the major rating agencies are not following quality assurance requirements. Actually, we have seen and we understand that some of them have top quality assurance requirements because their prestige is also already on stake. They also follow internal quality assurance requirements, but most of the regulators do not have a mechanism for ongoing, like, ongoing quality assurance for them. So in a nutshell, my answer is right now we keep it open. For sure, AAOIFI is not going to do this thing. Regulators have to put the core principles, and regulators have to give a license or permission. That license or permission is the control according to this standard and according to the first standard that we have put in, that regulator will control, will not allow everybody to do it unless they are sure that this person can fulfill these requirements. And then we have put in the internal quality assurance or self-quality assurance requirements in this standard, as well as the earlier standard that is part 1 of the project. Thank you very much, sir. There is an anonymous attendee, and always I request kindly to rename yourself. This tool actually allows you, Zoom tool allows you to rename yourself. And yesterday I was having a video call on Zoom with my daughter and son, 7 and 5-year-old, and they were able to actually rename themselves. They were having a fight on that only the daughter's name was there, so the son was having a fight, so they had to rename and add both names together. So I think Zoom is now quite user friendly, so I request anybody who has joined in as anonymous to please put in your name, unless you want to remain anonymous for a reason. So thank you very much for your kind comment. How open is AAOIFI to considering changes to the final adopted draft when it becomes a standard? The reason I ask is because once it's implemented in the market, we may face some issues in implementation of the standard. AAOIFI should hopefully be open to considering changes again after public consultation to amending such standards. It's an excellent comment. It's an excellent comment. I don't don't disagree at all with what you said. So first thing, AAOIFI is a human-based institution. Our boards, our working groups, our secretariat team, our consultants, they all are humans. We can do mistakes, and it's not only about mistakes, it's about evolution of the industry as well. Just to mention, several years back on the financial accounting standard side, we even started a comprehensive project to evaluate and take market input. And right now we are actually working on one more thing, that as AAOIFI we are going to start a regulatory research and development center, inshallah. We are waiting for some funding for that. And one of the very important steps that are there that will be done by this center or this department will be actually the impact assessments and the market feedback on the standards that are already developed. So we are completely open for that, and we believe that standards are live documents. You cannot just develop a document and say, oh, it is good for the times to come. No, actually it is good for a reasonable time when, number one, the market practices evolve. Number two, the industry evolves. Number three, the experience suggests some of the improved things that can be done. The experience suggests that some of the things mentioned there are not good enough. For example, initial phase, we are saying that it is highly recommended that it should be done, but maybe in future we can say, no, it is mandatory that it should be done. At least at AAOIFI's part, we can say it mandatory, even if it will still be in the hand of the regulators to make it mandatory or not. But my point is that this can change. Not only this, we can suggest some changes to the methodology. We can suggest some changes to the scoring approach, and that all can happen based on the market feedback. So number one, yes, we are open for market feedback on our existing standards today as well. So if you have any comments on our existing standards, we are open for that. Number two, for this standard and the second standard, the first standard in the project, I think we are in a learning phase. Even as of now, other than IIRA, I'm not aware of any rating agency that is offering this service on a large scale. And we expect, inshallah, this thing will happen. So once this thing happens, we will have good expertise and good input to actually improve the standard. Actually, we have discussed this thing time to time in our accounting and governance boards. And even the Sharia board has been revising some of the standards recently. You might be aware that our Sukuk standard number 17, Sharia standard number 17 is being revised. The cards related standard is already revised. The WAF related standard is already revised. Even on the Sharia side, where the evolution is less. Try to understand my point. In the governance and accounting, there is more evolution in the market. But on the Sharia, the core principles remain the same. Still, with the evolution of market, there were additional questions identified and additional challenges identified that were to be addressed in the standard. So on the Sharia side, we tried to do that part. So yes, the answer is yes. And inshallah, maybe what I take as a comment from you, and I would learn to know your good name. It will be good if you can rename yourself kindly. So thanks for very important comment. And I'll request Sister Alia, please, if you make a note of it for the regulatory team, that this standard, along with the second standard, after a period of 1 to 2 years, should be subject to a full impact study, including taking the comments from the market and the market participants and the rating agencies with regard to whatever improvement is needed. Thank you very much again. There is a comment from Brother Muzaffar Ahmad. The following areas need to be specific. A, there should have been definition for multilateral agencies issuing instrument. Okay, good point. Let me take it to the working group and the board. So we take your point positively, and I don't disagree. We'll just take it to working group and the board and see how they address this point. Only 6 scales are suggested, 5 in the investment scale and only 1 scale for non-investment scale. But the investors who are interested to take risk in their investment might be interested to know the extent of risk. It is suggested to add 2 more scales in the non-investment scale, such as risky or high risky. I think not a bad comment, to be honest. Again, whatever we have suggested is just illustrative for purpose. But yes, I personally feel your comment is very good. We'll take it to the working group and we'll see how we can improve the suggested scale. Thank you again for that. Number 3, the standard should specify that the rating is to be continued throughout the life of the instrument through periodic surveillance, and during this period, the rating agency rated the instrument must not be changed. Okay, first part, fully agreed. That rating is to be continued. Yes, I believe that rating has to be updated on all intervals. Then secondly, saying must not be changed, I think I would say that it should not be changed unless there are valid reasons for that. And I'm not going for details for valid reasons, but there can be valid reasons, you can well understand. So like, for example, a rating agency at some stage losing the confidence of the investors to some extent, at least, like, you know, so or something identified as a non-professional attitude from their side. So I still believe that they should not be changed unless there are some justifiable reasons. So your comment again is very highly appreciated and taken positively. Inshallah, we'll take it to the working group and request them to consider these changes or improvements in the standard. Under this standard, only the recognized rating agencies are to be allowed and not any other agencies, even they follow the provisions of this standard. This is a good point. You know, if the big 3 and others, they venture into this business, then maybe we will say, oh, we are perfectly all right with your suggestion. What we are afraid is that maybe the big 3 don't have it on their radar. And we don't have too many agencies like IIRA. So we know that there are some regional agencies in different countries that have at least started taking interest in this service. And in some markets, it might be more important, like in Malaysia, it might be more important. So for the rating agencies that are large local rating agencies in Malaysia might be more interested as compared to maybe a rating agency in Saudi Arabia. I'm just giving you an example. Although Saudi Arabia also has a big chunk size, rather the percentage of Islamic banking assets might be more than Malaysia. But I'm just giving you about the market maturity level also. So there are a few things that can be there in different countries working in a different way. So, I'm afraid that I'm not sure whether one of the big three or other local large rating agency would be interested in coming into this business. That is part one. Part two, our Sharia committee and the Sharia side members on the working group and the board have their concerns. Again, they have their concerns on Big Four doing the Sharia audits also. Let me be honest. So their point is that these institutions are originally conventional institutions. They do not have that level of commitment to Islamic finance. So we are more like, interested if there are more Sharia focused institutions coming in that. Again, it is not a disrespect to the institutions we are talking. We know that these institutions are doing great. These big three are actually rating all the major Sukuk and everything. These big four in the audit side are auditing all the major Islamic financial institutions and even doing Sharia audits in the countries where Sharia audit is required. So for us, it is all important to have the top quality institutions coming in. I'll take your comment to the working group. We'll see how we can put some additional boundaries for other new institutions to come up. But I can tell you what I'm saying is that this issue was addressed, discussed at length in the working group, discussed at length in the board, and then we came up with this sort of wording. I personally do not disagree with you completely on this part, because I personally believe that the quality that these big three and the big four on the audit side and some other large institutions are doing, or the large local rating agencies are doing, it may not be there in a new rating agency that may not be able to do that. But overall basis, I can still say that for me, putting more controls on that is better rather than completely deleting this requirement. Again, the answer that I have given to you is based on the discussions that have taken place in the working group and the board already. And it does not mean that I, as a member of Secretariat, am saying that your comment is not valid. No, your comment is good. It is valid. It will be taken to the working group anyway. Thank you again. Okay, so let me move to the next part now about the responsibility part, that we are saying that it is the responsibility, it applies to the rating agencies, and we have recommended, highly recommended, that all Sukuk and other publicly offered Islamic finance instruments, excluding those who are already done by the AAOIFIs who are rated. So if I'm an AAOIFI, like I'm Al-Barakah, I'm just giving the name for example. I'm Al-Barakah, and Al-Barakah get rating of Al-Barakah as an institution on GS10. And then Al-Barakah issues a tier 1 Sukuk. So we are saying that it is not mandatory, that highly recommended part that we are saying. For Al-Barakah, we are not saying that you should have it rated because Al-Barakah is rated itself. But if the government of Bahrain is issuing a public Sukuk, retail Sukuk, then we prefer that it should be rated because the public confidence is needed there. Not only the confidence in the paying capability of the government, but also on the Sharia compliance of the institution and the strength of the underlying assets. So considering these things, we believe it will not be that much important. But yes, for example, now let's take example that Al-Barakah as an institution gets B rating, and they want to sell their Sukuk, equity Sukuk, to top institutions who are asking for A rating. Then still it is possible that although Al-Barakah is still rated already, they can structure the instrument in a better way, put better governance controls on that, so that eventually they can get a higher rating than the institutional rating. And we have said that these should be preferably be updated annually and announced. So again, the comment was there that it should be continuing exercise. Yes, we believe, and we said preferences annual update. Coming to the definitions, IFIs is the common definition that we have. It includes window. Originator is the definition coming from our other standards, and originator is the term which is for, because issuer was the other term, but at times the issuer is the SPV, not the institution or the body who is getting the money itself. So we brought in definition for the originator. Instrument is defined in para 4. Rating agency is a company or firm which assigns in line with this paragraph 8 and 9. So 8 and 9 will reach there. Rating scale is, again, we allowed the rating scale to be like, in form of alphanumeric or any other symbol, or a scoring in form of numeric score. So you can keep it a open option. So you can have it AAA, AA, A, B, BB, B plus, B minus, whatever symbol is there, according to your methodology. Rating engagement is a rating exercise according to the standard, on which each rating engagement will be subject to all the requirements of the standard. Rating is in line with paragraph 11. Sharia principles and rules. This is something that some of you might not be aware, but most of you who have attended our earlier public hearings might be aware that AAOIFI has defined Sharia principles and rule as a defined term, and that term signifies a hierarchy of Sharia principles and rules determined in accordance with AAOIFI Sharia standards, the country Sharia regulations, the rulings of the Central Sharia Board of the country, the requirements of the financial accounting standards as to the extent that they are related to Sharia, and the approvals and rulings given by the Sharia board of the institution, which comes to the last level. And this ensures that you have a uniform set of principles. And then when we talk about rating, it becomes very important that you compare them on a peer-to-peer basis, and a relative scoring is required. So, for example, all of the institutions can say that, oh, we are following our Sharia board, but are they all following AAOIFI Sharia standards and the country Sharia regulations in the same manner? And even if they are doing it, are they using the less preferred products, or are they using the equivalent products? So, for example, I'm sorry to say, but for me, tawarruk is one of the necessary evils and the less preferred products of Islamic finance. AAOIFI Sharia standard says that tawarruk should be used on need basis only. So if there is a sukuk which is based on 51% of tawarruk, and effectively 100% of the return is coming from tawarruk transaction, and there is another sukuk which is ijara in permissible assets following the ijara standard of AAOIFI. So even if when we do Sharia audit of both sukuk, both will be having yes. But if you apply the rating mechanism, in which case it is quite possible that the one that having the less preferred products will be having a lesser scale on the Sharia compliance side. And on the other hand, as we'll come to these debates, our governance requirements and the asset management quality requirements will be higher on the sukuk, which is ijara sukuk, versus a sukuk which is predominantly a tawarruk sukuk. Now, coming to key compliance requirements. So first is license or recognition is needed by the regulator. So Brother Sadaqat, actually, we as AAOIFI can't do anything directly on that. We are not the regulators. We have no executive authority in any country. We are the standard setters, and the level of adoption of our standards vary from country to country and jurisdiction to jurisdiction. So effectively, we cannot say that we cannot interfere into that matter. Yes, with regard to the Sharia audit, we were thinking of having a quality assurance mechanism at a global level, not as a part of AAOIFI's direct mandate, but rather as a collective exercise of AAOIFI with some regulators. We'll be putting that on board and going forward, inshallah. But other than that, we can maybe in future we can come up with something similar on the rating side. But I think for that we need AAOIFI to grow for 10-20 more years and industry to go maybe 30-40 more years. So it has to be a credit rating agency fulfilling the requirements of the standard, or it can be a Sharia compliance and fiduciary rating agency, a specific rating agency developed for this purpose. That rating agency, again, requirements of the capacity and the methodology are contained in GS10 primarily, so we have not repeated all of them here in this standard. I can see another comment in the Q&A box. Sayyid Imtiaz Abbas Hussain, does rating agency consider fraud and forgery committed by Islamic banking and Sukuk? If yes, do the rating it as small or significant? Brother Imtiaz, the quick answer to your question is that when we see the element of fiduciary rating, the asset management quality and the governance requirements that we fulfill, and the corporate governance related to the Sharia matters, and the asset management quality and the transparency and disclosure part, I believe if I identified fraud or forgery is there, it will become a veto situation. For me, it will be because in some of the areas you will be getting a 0 score. So effectively, a 0 score in 1 or 2 of the areas, we have explained this thing somewhere, that that if you get a 0 score or very low score in one area, you may even you give only the scores of the individual areas, or otherwise you cannot give a single rating on that. So yes, there will be, it is to be addressed in the areas of asset management quality and in the area of governance and in the area of transparency and disclosure. So I believe that that if there is a significant fraud or forgery, even the rating may become 0. Some of these aspects are discussed in detail in the methodology. Thank you very much. We have a comment from Brother Muhammad Ibrahim. Is there going to be more Islamic financial instruments in coming period? I think yes, we are seeing that every now and then there are more instruments coming in, and again those new instruments that are coming in are of 2 types. Number one, they are evolution of the earlier product. So earlier product was having some of the weaknesses, or some market factors were not supporting it. So the institutions are coming up with the newer type of instruments, and this is happening all over the world. Secondly, with the technological innovation, I believe that a lot of new instruments are coming up and will be coming up. So we hope that, that as you mentioned, the answer to your question is yes. I believe it's a evolving thing, and it will continue to happen, inshallah. We have a comment from Sister Ghalia Ashamri. Is the definition paragraph, there is definition for urea, which is now called quasi-equity according to a new standard issued by AAOIFI. Why this is different? A good comment. Actually, quasi-equity is being used in accounting standards, and we already have it. Urea is one type of quasi-equity. We will not. I would not say that urea is called quasi-equity now. We will say that quasi-equity is the broader definition, which include urea and which may include some type of sukuk and other structures as well. So we take a note of this comment, Sister Ghalia, and we'll try to make sure that we keep consistency, or otherwise we clarify your point. Thank you very much. And thank you very much for joining. Brother Anwar Subra, welcome, brother. Thank you very much for joining again. Definition of originator. It has already been established by AAOIFI that SPV must be independent in ownership and management from the originator. The definition makes the originator and issuer the same, which defeats the previous rule. The issuer of Sukuk is the SPV and not the originator. Cash flow to originator is passed through the SPV, which holds the Sukuk assets. Brother Anwar, your comment is partially correct, and partially I would beg to disagree. For example, in case of some of the tier 1 Sukuk, there is no SPV involved. There are some structures in some of the countries like Iran, Pakistan, and Sudan, where a Sukuk can directly be issued without having an SPV. And even in those countries where SPV is a common practice, is still some of the tier 1 Sukuk are actually taking the urea pool or the quasi-equity pool as underlying asset. And we have seen these transactions actually in the market. So at times it is a direct Sukuk, which means that a SPV is not involved and there is no significant ring fencing. So, but again, these are different type of instruments. So we need to come up with wording which is like, acceptable for all purposes. So for example, if I use SPV or I don't use SPV, using the term of originator is good enough. That is our understanding. But again, Brother Anwar, thanks for your comment. Partly, I think your comment might be relevant and we might need to incorporate some for that. But with regard to some of the things like, even SPV without even the definition of Sukuk and even definition of this thing, we have option of having it without SPV as well, and which happens not in all instruments, but in some of the instruments. So with that, thank you very much again. And I think we'll take it to the working group and we'll see how we can address your comment in a way that it is better clarified. Thanks again. What is the, Brother Imtiaz, Sayyid Imtiaz, the Abbas Hussain is a comment again. What is the minimum Islamic qualification required to do Sharia audit and Sharia rating agency? Brother, the problem is that in different parts of the world, there are different qualifications and different fit and proper criteria for Sharia board members and the Sharia advisors, etc. We have provided at some places in some exposure drafts and some of the places we have provided some general criteria. We have come up with a reasonable criteria for these things in the standard number 10. But as a whole, it is not good to say that, okay, the person should be mufti. Okay, in some countries, a person may not be a mufti. He may be having a PhD position. And in some countries, it can be maybe a person having an LLM Sharia equally capable to do that. And for the base level qualifications and the minimum qualifications, AAOIFI has its own qualifications, Certified Islamic Professional Accountant Program and Certified Sharia Advisor and Auditor Program, which is now being revamped and changed to Certified Sharia Expert and Certified Sharia Auditor Programs. So considering these things, that we are also coming up, in CF have good qualifications. So there are different qualifications in different parts of the world. And there are some countries where a master's in Islamic studies might be enough because there are not enough institutions and not enough people developing people for Islamic finance. But there are some countries where they will prefer that a person who is considered for that has to be a mufti. So what we are asking the rating agencies that they must have the Sharia related capacity, which means that they must have the team members who are involved in the rating process having the Sharia expertise. And obviously, if it is a conventional rating agency, they need to add the Sharia capability. Or if there is a specific Sharia compliance and fiduciary rating agency, it cannot be happening that they have only the scholar side or the Sharia expertise side or Islamic finance side. They need to have the rating expertise side as well. Side as well. My apologies. Now, we have comment from Brother Hujjatullah Barati. Assalamu alaikum and welcome, brother. While purchasing of Sukuk of the underlying asset is not known, though it is deemed Sharia compliant, this is mostly facilitated by brokers, which is your opinion in this and how you can accept it as Sharia compliant Sukuk. Brother Hujjatullah Barati, I fully agree with you. As AAOIFI, we have developed a governance standard on Sukuk, which clearly says that you need to provide details of underlying assets. We have developed an accounting standard for Sukuk financial reporting for Sukuk holder, a specific standard on that, which means that the Sukuk holder must have a summary financial statements of the underlying assets. As AAOIFI, we can't do anything more than that. Allah, we are like, what they say, Allah subhanahu wa ta'ala has said in the Quran, Lasta alayhim bi musaytir and la yukallifullah nafsan illa wusaha. So we are trying to do our level best. So the answer to your question is, AAOIFI has the solution. AAOIFI has asked the transparency and disclosure requirements in the governance standard, and AAOIFI has asked that under FAS 34, Financial Accounting Standard number 34, financial reporting for the Sukuk holder, that all Sukuk holder should have enough information on the financial side on the performance of the underlying assets. So to be honest, we can't do anything more than that. But saying, is it Sharia compliant or not? For me, I cannot say it is not Sharia compliant if the things at the back end are like, still compliant. So I would say that it is not transparent, and the governance and financial reporting as good practices are not followed. But saying it is not Sharia compliant will be too much, because it is still possible that although I have not given you full information, but I have fulfilled the Sharia governance requirements. We are having so many good comments. So Sheikh Hisham Masalki, Assalamu alaikum wa alaikum assalam. Looking forward for your comments, brother. And Brother Osman Mohammed Imam, is it okay for Islamic rating agencies to use conventional rating agencies as a benchmark to determine AAOIFI rates? The reason I have asked this question is that when we talk about Islamic finance practices, one of our current challenges is that the industry does not have its own banking and financial structures. How does AAOIFI see this issue from the Sukuk and Islamic banking rating perspective? Okay. First thing, in the beginning, I said one thing. When I invest in Islamic finance, it's not only the credit I look at. And it is quite possible that the credit worthiness is still there, but the underlying assets made a loss. So for example, if the underlying assets made a loss, would it be permissible by Sharia that that loss is made good by the issuer or the originator, even if there is a genuine loss? As per Sharia, the loss is to be borne by the Rabbul Mal. Now, this is one fundamental thing that changes the perspective. So the credit rating might not be enough, even if the institution is like, credit worthy. So from our perspective, the methodology for rating of Islamic financial institutions should be different. But yes, credit worthiness is one of the elements, and that is part of the assessment elements. So from our perspective, the second part of your question is with regard to the having the talk about Islamic finance practices. As AAOIFI, we are coming up with a full bouquet of solutions. So we have the Sharia standards, which are adopted by so many countries. Some of the countries have them as part of regulations. Bahrain has it as part of law. We have accounting standards. We have governance standards. We have ethical standards. If you see all of them together, we are providing you a full basis of full basis of evaluation. Yes, still there are conventional good practices like in the areas where AAOIFI does not have accounting standards, the financial reporting standards by IFRS. Similarly, the local corporate governance requirements, the local ethical requirements, the ethical requirements which are otherwise applicable to the financial sector by FSB. So, and also the standards issued by IFSB and other infrastructure bodies on Islamic finance. So from our perspective, Brother Osman, we have provided, along with other standard setters and regulators, enough means for that assessment. But yes, in some of the countries, this whole bunch of standards is not adopted. Then we have kept this option of having a jurisdiction-specific rating, or the option of having a, I think what we call having a specific, scoring style-based rating. So some of these things can be modified in the rating approach, but from our perspective, we have kept the options open. So as AAOIFI, we provided the whole solution. But if the country does not adopt AAOIFI's Sharia standards, you can still have a jurisdiction-specific ratings according to what is locally applicable. And at least a Sharia board of the institution will be there, so that at least you can have some jurisdiction-specific rating. This will, since the parameters are changed, it will not be called directly based on AAOIFI rating. It will be called a jurisdiction-specific rating based on AAOIFI standard. Thank you very much, Brother Osman, for your very important comment and question. Sheikh Hassam Masalkhi, when we will see a case study covering each new standard to much focus on its consequences? As I mentioned, brother, we are planning for impact studies and country reports, inshallah. Only thing is that as AOIFI, we need your support, I can see like 175 people attending this public hearing event. This is very encouraging, but you can understand that AOIFI right now is working on very, small, with very small team, very small resources, and we are looking towards some of the donors to fund the project with regard to this country impact reports, etc. And we need your all continuous support for AOIFI's operations. Inshallah, within next 1 to 2 years, you will see that we'll be starting coming up with the impact reports of the state and the country reports on adoption of our standards. Brother Muhammad Jidda Tom, Assalamu alaikum again, brother. Thank you very much for joining in. When CSA will be split to CSA and CEC? I'm sorry, it's a irrelevant question, but it is done. Now only the remaining paper, those people who have already registered for CSA are retaking the exams of CSA. Otherwise, the program, Arabic program is already launched in our last conference, and the English program will be coming up shortly. Dr. Abdullah Shiham Hassan, Assalamu alaikum, brother, and welcome. What if a government issued Sukuk is anonymous with regard to the utilization of investment funds for whichever reason or doubtful with regard to Shari'ah compliance in utilization of fund, and yet the government has obtained a top rating based on the government sovereign guarantee? And the question is, what institution should the investor rely with regard to fiduciary rating or Shari'ah compliance rating? Actually, we brought up the standard because of these questions. The standard, the purpose of having this standard and the first standard on Shari'ah compliance and fiduciary rating for institutions for the same reason, brother. Actually, we believe that credit rating is not enough because they have sovereign supports, they have sovereign guarantee. It does not mean that the level of compliance in the instrument and the level of asset management quality is there. And even if you don't know what are the assets, like, let me give you an example. Like if I invest in some countries, I know that there is a airport or a motorway or a port or a piece of land that is there. At times, some of the things are not even clear. So to be honest, it is one of the biggest challenges that we have in Islamic finance right now, that the Sukuk, the underlying assets of the Sukuk at times become irrelevant, and people consider only, na'uzubillah, that it's just a bunch of papers to have a conventional like transaction. So I simply would say that the purpose of this whole exercise is this. Now the question is, again, we want all the rating agencies, good rating agencies, to come into this business and start providing these services. But as of now, I believe that the one that we are aware of is only Islamic International Rating Agency that is doing this exercise for several years now. And they used to do it according to their own methodology, and now they are trying to do it in line with the AOIFI's methodology, and they did some ratings in line with AOIFI's methodology as well. One thing I would suggest, I'm very sorry. Today we are having so good discussion, so much good number of questions that I'm just getting afraid that the time may not be sufficient. But towards the end, I could see Sister Sabine from Islamic International Rating Agency to be available today. So Sister Alia, if you can just coordinate with Sister Sabine about some experience sharing towards the end. So if she can, she can share the experience, or if Brother Fahim is there, so one of them can actually share the experience that they have with regard to this one. A little bit, like maybe 5 minutes we can allocate towards the end. And I'm afraid we might need to, this time allocation need to be better, but it is, it is always good to have comments and be able to have this very fruitful discussion. So in a nutshell, The purpose of this standard is to answer your question. And as of now, we are aware of IIRA, but we are more than willing and welcoming and are trying to encourage all the Islamic, all the rating agencies that are involved with Islamic finance to come up with Sharia compliance and fiduciary rating. And some of them actually had some collaboration with us in different forms. So we are willing to enhance that collaboration. And we are thinking to plan a roundtable also mainly with the rating agencies and regulators for helping us in doing some better base work so that they can actually start working on this. Thank you very much for your comment. There is a comment from brother Ibrahim Tijani Senosi. I want to propose modesty that AAOIFI can put it in its standard that each country which want to introduce the Islamic finance or the bank want to introduce an Islamic product in its activity should previously have authorization from AAOIFI. And why this? It is to control the Sharia compliance deeply so that the principles of Islamic finance should not be mixed with conventional finance. To make this real, AAOIFI can also put a national representation for each country. The second part of your comment that AAOIFI can also put a national representation for each country, we are working on multiple things. That number one, we are trying to have better coordination with the regulators and taking their nominations for our boards and working groups, etc. And we are now working on developing the regional forums also. So we are trying to improve this collaboration on an ongoing basis. And thank you very much for this comment. But the first part of your comment, my apologies. Actually, we need to understand how this global, this global sort of work can never be imposed on different countries. Every country have their own jurisdiction. They have their own, laws, regulations, and they have their own regulators who have their strong control over the industry. So, from that perspective, AAOIFI can always recommend the countries to adopt AAOIFI standards, and not only the Sharia standards, but also the governance and ethics and accounting and auditing standards, because this completely, it's a package which makes sure that that Islamic finance works properly and reports and implements the things properly. So from our perspective, it's not only Sharia standard, all these standards, but it is not possible, I'm afraid. And till the time we have multiple Muslim countries and we have countries that are not even Muslim countries and they are still having a little bit of Islamic finance, is still in all those situations, we cannot impose anything. So from AAOIFI's perspective, my apologies that as much as we would like to make sure that every institution around the globe is compliant with AAOIFI standards, we cannot impose it. Thank you very much for your kind comment. Next comment is from Shinof Shaib. Again, my apologies if I'm unable to pronounce your name correctly, so my apologies in advance for that. How is it possible to comply with the provisions of Sharia and the credit ratings of Sukuk and other Islamic finance instruments under the international monetary system? Brother, I think it is possible. Right now, Islamic finance is not completely working independently. It's working within the domains of the conventional financial ecosystem, but still we are trying to make sure that we are complying with Sharia requirements and fulfilling the fiduciary requirements. So from that perspective, I fully believe that it is still possible, although it is not ideal. The ideal is that obviously there should be a global Islamic economic system, which makes Islamic financial system as a subset. Thank you very much. Sister Ghalia Shamri has another comment. In defining the originator, the beneficiary may be a party other than the originator. We take your comment and inshallah we'll consider how the definition can be improved. But I'm afraid that this definition is coming from an earlier standard, which is already issued by AAOIFI. So maybe we'll not be making changes. But if a clarification is needed, we'll try to provide some explanation. Brother Islam, Muhammad Islam Ahmad, one, preference shares are not allowed as per Sharia Standard 12. What are Sharia compliant preference shares? Brother Islam, there can be multiple models of Sharia compliant preference shares, but this is not today's subject. And thank you for joining in. We can have some offline discussion later to explain how our preference share can become Sharia compliant. Anonymous attendee, we are at IIR agency which has not attracted much interest. Is there a need for such a standard given the fact that there is no demand from market for such rating? There is also various Sharia boards advisors which certify Sharia compliance. There are two points. First, let me answer the second point. The Sharia boards advisors are there, but still you need Sharia audits and still you need Sharia rating. This is something that there are different type of certifications which are required. The independent assurance is required. Even if there is an external Sharia audit, the rating might be needed because rating gives you a score or rating based on a relative on the relative basis, and additionally it gives you ratings based on the future outlook, not only based on the past data. So from that perspective, number one, the rating standard is still needed. Number two, with regard to it has not attracted much interest. There are 3-4 elements on that. Number one is about the marketing. Number two is about the regulators' interest. Number three is about the market maturity level and the customer maturity level. So, for example, in some of our Muslim countries, you will not find any strong consumer groups. But in the West, you will find very strong consumer groups. So the consumer groups actually at times dictate or at least interfere into the policy making for the respective industries. In our part of the world, in Muslim countries, you will not find any strong consumer groups. So it is just one example that with the maturities of the market, things get improved. When the credit rating came initially, it was not mandatory anywhere in the world. It started with some of the institutions trying to advertise that they were doing it, and then it came as a peer pressure that if others are rated, I should also be rated, and then it came as a mandatory requirement from the regulators that the public interest institutions are mostly required around the globe to have credit ratings. These are the things that came in a gradual manner in a period of nearly 100 years. Now we are just for this Sharia compliance and fiduciary rating, we are not even 15. Maybe at max we can say that it is just an experiment for last 5 to 10 years. So I think that after having these standards and with the right marketing and with the maturity level being developed with the industry, with the consumers, the maturity of the industry, the better understanding and better regulation by the regulators, all these things in the times to come will bring it. And again, in the last thing, as AAOIFI we say, La yukallifullahu nafsan illa wusaha. We believe as AAOIFI that this is something needed, but we cannot enforce it. We can just do what is needed at our part. What is needed at our part is to develop the right set of standards and then to convince the institutions and the regulators to get that right set of standards implemented. So we'll continue doing our part. Thank you very much for your comment. But actually, I am hopeful about this thing, and I think it will happen in future, inshallah. Brother Muhammad Islam Ahmed has a comment on paragraph 48. Brother Islam, I'll be thankful if you can remind me at paragraph 28 again, 48 again when we reach there, 48 and 53. A minimum major parameters of asset quality should be defined. Actually, the purpose is not to define, the purpose is to keep it flexible. So it was not consciously defined, but we will take your comment to the working group. Again, comment by Brother Sayyid Imtiaz Abbas Hussain, in the country where there is no satisfactory Islamic environment, how Sharia auditors and rating agency look into reporting or rating of Islamic banks and Sukuk? Rome was not built in one day, and things have to go from different angles. So you cannot say till the time Islamic finance industry does not have a full proper Islamic environment, till that time we can't do it. Actually, things have to start from different angles, and actually having the Sharia compliance audit and Sharia rating actually will help you having the better overall environment for the institutions as well as for the economy. So it is egg and chicken situation. What is needed? So from our perspective, It's not horse before the cart and cart before the horse. Both of them are needed at the same time, even if they are they are put at the right place, but both are needed at the right time. Brother Zakir Hussain Shalim, Assalamu alaikum. What is the minimum error rate to justify whether a Sukuk issuing company is reliable or not? This will, we have given the judgment, the broad parameters, Brother Zakir, but further details are in the hand of the rating agency to define more detailed parameters. So we have given the outline for the parameter and the components of the rating, but we have not gone into detail with regard to developing what exactly is to be done. So again, this reasonable level of flexibility is important for the rating agencies to have their own internal methodology. Anonymous attendee, with respect to Rule 37C of the exposure draft, okay, if you allow me to reach there and then address this one. Brother Islam, again, Sharia approval is totally responsibility and domain of Sharia board. No direct accountability is covered in the draft. For example, Dana Sukuk. Brother Islam, Dana Sukuk was one of the reasons that we developed some of our standard. Again, I won't say it was one of the bad examples, and we were already addressing some of those. So we have covered, actually, you are seeing the wrong standard for that purpose. The problem is, Brother Islam, that everything you cannot put in one standard. So from my perspective, unfortunately, you're looking at the wrong standard. There is a AAOIFI standard GS12 on Sukuk governance, which is actually talking about what are the roles and responsibilities of the parties and our governance organs with regard to Sukuk. This standard is not about defining the responsibilities. This standard is about assessing the quality and fiduciary and Sharia compliance quality. So unfortunately, you are looking at the wrong standard. Yes, we have addressed the issue that you are addressing, trying to address, but that is in GS12. Thank you very much again for your very important comment. Brother Islam has a comment that rating may be on international pattern, that is A++ or B, etc. Brother, it is completely left to the rating agency, and some of the rating agencies may be coming on a scoring system, because this is different than the general rating. A single rating may not work in some of the situations. So maybe they will be coming up with the scoring system. But again, we kept this option open. There is comment from D. Kumar Khalif. In a country where Islamic finance is just being introduced and implemented, and financial instruments and solutions are being made in the UK, how fast does AAOIFI intend to implement these standards? Again, implementing the standard, unfortunately, is not in our hand. But one thing I would always say is starting with the right set of standards and right set of regulations actually help. We normally quote the example of Oman, which started on day one with the adoption of AAOIFI standards and with the adoption of a very good Sharia governance and very strong Sharia governance control, like regulatory framework, and having very good, controls on some of the controversial transactions. And effectively, if we see, Oman Islamic banking had been the fastest growing. So there are some actual real life situations where we see that starting on the right path from day one actually gives you better advantages. To me, honestly, I use it as a term as last mover advantage. Commonly it is said that there is a first mover advantage. But for me, the last mover advantage is there, that at times you learn from other people's experiences, and then you do not repeat their mistakes, and you start with a good set of benchmarks that is already available. Brother Islam has asked a question, what about the country rating? Brother, I believe that the country rating is not our address subject, and I don't think that that is needed as of now. Yes, only thing that might be needed is the sovereign Sukuk rating, and we believe that this standard covers that. Brother Najibullah Umari, Assalamu alaikum. Islamic finance instruments, specifically Sukuk, is the demand of the Afghanistan economic market. Lack of capital market or stock exchange is a big challenge. So we will be able to issue Sukuk and use some foreign markets for trading. Brother Najibullah Umari, I think it's a good comment. I believe Afghanistan has a lot of experience to be done, and we believe that we can have some good experiences there. But to be honest, local capital market is a must. I doubt that given the Afghanistan's current situation and the risk of sanctions, etc., the foreign markets will be interested in working with Afghanistan's issuers. So to be honest, the real solution will always be that as soon as possible, the Afghanistan regulators have to start working on developing of the local capital market. And again, for Sukuk, you don't need a full-fledged capital market. I would like to make a suggestion that we have been talking in past from AAOIFI's perspective, and I've talked on this in some of the forums, that a digital Sukuk exchange might be a solution. AAOIFI is itself planning on something similar to that with some of the service providers, and I think that a digital Sukuk exchange might be a solution for you, which will be like sort of a we can also consider using the crowdfunding platforms for that, but a digital Sukuk exchange might be the quickest, easiest, and a good solution for a market like Afghanistan, Libya, to some extent, I would say Iraq and other markets, Yemen, that is establishing again some of the Islamic finance practices. So for these markets who are quite, their priority is to have only Islamic finance. The ones that I'm talking about, Libya, Iraq, Afghanistan, Yemen, they mainly have a priority of having only Islamic, but they don't have the infrastructure and all that. So for that, the fintech can provide the right solutions. And I think that our recommendation to Afghanistan regulators would be that they need to come up with technology-based solutions. Capital market may be a bigger thing as compared to a small scale digital Sukuk exchange, etc., which can be done with limited cost and with easier options. And we believe that countries like Libya, Iraq, Afghanistan, others, whoever is considering having full-fledged Islamic finance and their markets are very small, I think that it's a good point to start with the better practices. It is good. You know that Afghanistan already adopts AAOIFI standards, so but the good part can be that you implement the standards from day one in a way that you establish a very robust and strong financial market based on Sharia compliance. Thank you very much, brother. Next comment from brother Inamullah Frotan. How do we know that the government which issues Sukuk is according to Sharia compliant? Because most of the time they do not disclose their work. The quick answer is this standard is trying to address that approach. This standard and the Sukuk governance standard require about the underlying asset. So if the whole government is not Sharia compliant, still the Sukuk may be Sharia compliant. If the structure is compliant, Sharia governance is there, the compliance is monitored, and if the necessary financial reporting and reporting compliance is done. So from all those perspectives, it is quite possible that there is even a non-Muslim country's government that can issue Sukuk. But what we insist is not that the whole government becomes Islamic. Obviously, it should be. But at AAOIFI's mandate, we say that if you issue a sovereign Sukuk, still it should be compliant with the requirements of this standard, so that a person who invests in those Sukuk has the confidence on Sharia compliance and has the necessary transparency, disclosure, regulatory requirements in line with the relevant AAOIFI standards. Brother Islam has another comment again on paragraph 48. So let me move forward and see there. Actually, I can see that there are some hands raised also. Normally, we try to address that thing also, that if we can allow some of the participants to actually speak up. But unfortunately, I think today time is very short based on for last maybe 30-40 minutes, I'm just answering the questions raised. And this is for me, this is the beauty of public hearings, actually, that we can have more and more points discussed, discussed in a live environment. But my apologies, I need to complete the remaining sections as well. And my further apologies that I'm afraid that we may have to go a little bit beyond time. So please cope up with us, and we'll try to be quick now onwards. So this is about the eligibility criteria for the rating, and then we have put the requirements with regard to the we have a fit and proper criteria also in GS10, not in this standard, in GS10. We have Sharia, we have the requirements of accepting the rating engagement, which are covered in GS10, so that will still be applied. We have ethical requirements in line with the AAOIFI ethics code and other relevant ethical requirements which applies on the rating agency, so that also apply in this situation. Then we have the assessment scope and parameters. So then we are saying that assessment scope is mainly in two aspects, and out of those two aspects, there are further details. So in order to explain you better, I'll take you to that table rather than taking you to these sections. So I'll prefer to show you how it will be working. So all the explanations are contained in these paragraphs, but before that, it is good if we try to understand this table. This table is the crux of the standard. And my apologies again, since this is a big table, so some of you might not be able to see it very clearly. So this is exactly the same as we have in the standard. So those of you who cannot read it properly can just go to this paragraph 48 in the standard, for which PDF version is already with you. So now there are two main aspects: Sharia compliance and governance, and fiduciary performance and capacity. And we have said that there are different types of instruments. And in the context of different type of instrument, the Sharia compliance and governance aspect and fiduciary performance and capacity aspect may have different weightage. And within them, there are different breakups of those. They may also be subject to different weightage. So, for example, first column is about the institution's rating suggested weightage, which is in GS10. So the first column is actually only for illustration purpose coming from the GS10. And then we can have Sukuk or other Islamic finance instruments classified as equity, quasi-equity without purchase undertaking or guarantee, then quasi-equity with purchase undertaking or guarantee, and liability. And then there are asset products. Now, if we try to understand how it works. So the compliance with Sharia principles and rules, which is the first part of the Sharia compliance and governance, we have said that it should never be less than 30% of the weightage. It should be between 30 to 35% of the weightage all the time. But now, if I have the best set of rules, it's still its implementation, as they say that the taste of the pudding is in its eating. So its implementation doesn't work well till the time you don't have what you call a good governance and control mechanism. So then you need to have a Sharia governance framework. You need to have corporate governance practices related to Sharia compliance and implementation. You need to have corporate governance. You need to have transparency and disclosures. You need to have ethics and values. And you need to have, these are the four elements within Sharia compliance and governance. So these are four elements subdivided again, that Sharia governance framework may be relevant at times for originator, instrument, and service provider and trustee. Same applies to your corporate governance practices may be relevant for originator and service provider and trustee, etc. Similarly, the ethics and values also apply on the originators and trustee. Now, what happens that this weightage is still, depending on the nature and type of the instrument, may be different. Then the second part is fiduciary performance and capacity, in which there are two elements: fiduciary part and creditworthiness part. Now, if it is a liability sukuk, the creditworthiness part is relevant. Now, liability sukuk can be a sukuk based on salam, or it can be a sukuk which is predominantly tawarruk sukuk. When I say predominantly tawarruk sukuk, people call murabha sukuk. Sorry, again, my point is that tawarruk should be named as tawarruk, not as murabha. So we shouldn't be mixing up murabha with commodity murabha or tawarruk. Murabha and commodity murabha are two different things. Actually, yes, the way the origin is the same, but as a product, they are completely two different products. In a nutshell, there can be a murabha sukuk as well. But the point is that murabha sukuk is not credible. But when I say predominantly tawarruk sukuk or predominantly murabha sukuk, which means that the major part of the return is coming from that side, even if the sukuk, for the sake of tangibility ratio, has some tradable, some tangible assets to make it tradable. I do not want to go in that detail right now. What we have suggested here is that we actually have a suggested weightage for different components. So for example, compliance with Sharia principles and rules should not be less than 30 to 35% all the time. But if we are talking about a liability sukuk, there can be a 35 to 45% weightage of the creditworthiness of the party. And still, the Sharia governance framework will have its significance, like Sharia governance. But again, some of these things will be broken down in different situations. Like in case of equity and quasi-equity based sukuk, particularly quasi-equity without guarantee, you might need to break down for originator and instrument and service provider and trustee. But where the quasi-equity is with a purchase undertaking, which means that purchase undertaking or guarantee is effectively guaranteeing the capital in case of default by a purchase undertaking or by guarantee. Again, here we are not addressing the Sharia compliance issues. Yes, we know that there are some Sharia compliance models to work on that. So the option one, that is equity or a quasi-equity without purchase undertaking or guarantee, would be main proper what we call in the conventional, the rating term, what we call the asset-backed sukuk. The quasi-equity with purchase undertaking guarantee will become asset-based. Now, depending on the creditworthiness element, it might still be relevant if there is a purchase undertaking or guarantee, because the fundamentally the returns are to come from the assets themselves, but a purchase undertaking or guarantee may be invoked in case of default types or risk type situations. So you need to have give some weightage to the creditworthiness element as well. Again, the standard says that these are the suggested weightages. These are the suggested weightages for allocation, and you can have a completely different mechanism for that. Rating agencies only have to establish their own mechanism, generally based on this guidance, and then they need to make it public and make it transparent. Obviously, they cannot change it during the course of the discussion, the course of the exercise. Now, we have the Sharia compliance with Sharia principles and rules. So we say that you need to follow with the hierarchy and you need to follow all these things. Then we come for the Sharia governance framework. So what are the standards? And when you develop the parameters, you need to develop the parameters based on AAOIFI standards and the governance standard on Sukuk and FSB standards, etc. When you come to the corporate governance part, you need to consider the IFSB standards and AAOIFI standards, which are related to this element, and the corporate governance requirements of the respective country. Then you need to consider the transparency and disclosure related requirements. So you need to consider the requirements of AAOIFI phases, particularly phase 34, as I mentioned earlier. And then we have transparency. Even in the cases where you may have Islamic IFM standards on the instruments, you can follow. You need to consider those. Then ethics and values. You need to first apply the AAOIFI standard, then IFSB standard, then other codes of ethics, etc., which are there. So the benchmarks will be developed based on that. Now, and coming to fiduciary response, performance and capacity part, you need to consider two aspects, as I mentioned. One part is the asset management quality, and so asset management quality itself has two aspects. One is the quality of asset, which is the returns that are generated, and then the asset management quality applied. So you need to understand the quality of the assets today as well as the performance of those assets in the past. Fiduciary performance and capacity has the other element as being the creditworthiness of the originator. These are the guidance provided in this section. Now coming to tiered and jurisdiction specific rating, I mentioned this thing already, that if AAOIFI standard, if for example you are rating in a country where AAOIFI standards are not mandatory, now the bank has followed the Sharia board or the country requirements, but not the AAOIFI requirements. If you apply the AAOIFI requirements, the rating goes down. So in that situation, if you give the AAOIFI requirements, either the bank has to follow AAOIFI requirements in a way that it does not create a non-compliance with the AAOIFI requirement. But if they create a non-compliance with the AAOIFI requirement or do not follow AAOIFI requirements, In that situation, a jurisdiction, a specific rating consideration or tiered rating consideration can be applied according to these requirements. A relative weight of the weightages, as I said, that this is basically only a suggested distribution of weights and it's not mandatory. Now, I think we have some questions in the Q&A tab. If you allow me just to give you an introduction of the remaining part of the standard, very quickly, and then we can come to take all questions at in one go. So then we have the limitation of scope and suitability of benchmark parameters. If the suitability of benchmark parameters is not there or limitations are there, so the rating agency should actually consider even withdrawing from the engagement. And then we have a rating scale related guidance. So this is the guidance only with regard to the rating scale. So we have put it like a score based, not rating based here. And I think this was one of the discussion points in the last public hearing as well, that even the rating scale which is there in the GS10 should be here as well. So I think Sister Alia, please make a note of it, and we need to decide whether we want suggested rating scale here as well or not, or otherwise we'll remove this column. But this has to be decided by the working group based on comments. So this is the scoring range, but rating range is there in GS10. So I think we should keep it. So there are different levels. I think there was a good suggestion here, highly risky and risky also. So maybe unsatisfactory or others we can consider from those perspective, adding those characteristics as well. Now coming to the principal procedures, some of the principal procedures are already contained in GS10, which we have not addressed again, but some of the specific requirements might be need to be suitably amended according to this requirement. So this is standard. Documentation, archiving and confidentiality also we have created reference to GS10 and we have not duplicated that part. Reporting related comments, again, we have referred to the GS10. Effective date of this was suggested to be 1 July 2023, but it is not yet final. So we'll be looking forward to have comments on the effective date. What would be the effective date that you prefer? Our preference would be that maybe we will be putting it 1 July 2024 or 1st January 2025 now. With that, I know that I could not do justice with some of the sections here, but I think I will try to do justice with all the questions that we have. So now coming back to one of the comments from Sister Amanda in the beginning that I did not address completely. So now para 3 of the second sentence states that nature of instrument determine whether the assessment is pitched on an instrument or institution level, which instrument would not require the assessment of the functions of the originator. It should seem that the benchmark parameters, the ethic and values of the originator are considered all applicable to all 4 types of instruments. The importance might vary, but it seems that the parameters are applicable. Yes, that is one point, that even if it is only a credit rating, it means that it's only a liability product or an asset product, we believe that ethics and values still applies. Yes, the weightage may be different. So, but on the other hand, if it is a equity type or a equity type or quasi-equity type without purchase undertaking, then credit worthiness becomes irrelevant. Or if it is a credit-based, pure credit-based, that is liability-based, where the predominantly returns are directly, either 100% returns or predominant returns are coming from the liability side, then it is actually the credit worthiness that applies. So yes, these are the things that can be amended according to the nature of the instrument and the nature of the institution or the originator. Can a rating agency choose to exclude any of the parameters based on underlying the suitability paragraph? Now I have, as I suggested, you can have the tiered approach and the jurisdiction specific approach. So if, for example, if you say that there is a country where AAOIFI's ethics standard is not adopted at all, and you do not have any other ethical parameters on which you will assess. So for example, there is no ethics code applicable to the entity and the AAOIFI's ethical standards are not applied. So the question can be, can ethics be completely excluded from that? Not because that ethics don't apply, because there are no suitable parameters available? So I have two answers to your question, which are contained in this standard. One part is the jurisdiction specific, in which you can say that this jurisdiction specific rating does not include the ethical parameters. And the second part is where we said that you need to see the suitability of benchmark parameters and decide that even if you want to go out of the of the rating exercise, you may not do the rating exercise. So let me give you an example that if there is an entity which is not subject to any written ethical standards, but ethics are global. The honesty, the fairness, the truthful representation, the faithful representation, the equity and equitability between the stakeholders, these are all ethical requirements. The ethical dealings and not having fraudulent financial reporting, all these things are ethical requirements. So the question is, if there is no ethical requirement as a part of benchmark parameters because there are no adopted standards and regulations on ethics, still there are ethical situations that you feel that are violated based on the general assessment of ethics, either you develop your own benchmark parameters or you say that we don't have benchmark parameters, so the benchmark parameter suitability is not there, so you might need to get out of that business. Or you would say that, okay, we'll adopt, still test it according to the AAOIFI's standard. So there are the option, one is the option of tiered and jurisdiction specific rating, which are provided in the standard. So you can do the tiered ratings and you can do or you can say that, okay, we did not do the ethical rating, but other ratings we did. Or you can say that jurisdiction specific rating may not include this one. And you may go and assess and say that since the benchmark parameters are not appropriate, so we may not give an opinion, we may not give a rating advice with regard to this aspect of ethics. So these are 2-3 different things that are coming to my mind. I believe that your answer is now responded appropriately, but if you feel that there is anything that I need to explain further, please feel free to put that question again, that part of the question again that I was unable to do it. Brother Islam, actually, when you see it is suggested weight, then it was never expected to be 100 exactly, because if you want to have it exactly 100, you cannot give a range. So that is the answer to your first question. Actually, I just saw 48, but I did not see the question at that time. So I wanted to answer it here. So nutshell, when you suggest a range, your total cannot always be 100. But when the institution, the rating agency applies that, they will select the range in a way that it makes 100. But again, as a percentage, it is not always necessary. You can have another scoring system. These are suggested weightages only. From the anonymous attendee, again, with respect to Rule 37C of the exposure draft, IFM standards are not universally acceptable, still particularly with some UAE Islamic banks. So there should be some allowance for UAE's recent precedent drafts of public Sukuk transactions, which have been approved by UAE IFIs are AAOIFI or Shari'ah compliant. Actually, they are appearing at the level below the AAOIFI Shari'ah standards level. So if the AAOIFI Shari'ah standards are complied and these are still not applicable in that country, you will develop the benchmarks according to that. Again, this is one, these are the suggested parameters, the areas of parameters. But yes, we believe that IFM standards actually provide some good guidance. Again, their level will be below in the sequence because it is according to the sequence. So you have to apply the right sequence on that. So if you see, if you apply the right sequence, so first sequence is requirements of FAS 34. The second sequence is transparency and disclosure requirements of IFSP. So we have AAOIFI governance standards and accounting standard first. Then we have IFSB standard. And then we have IFM standard. So I can generally say that IFM standards are developed as per AAOIFI and IFSB standard, generally, not 100%. There are, because again, they are independent test and setting bodies. So at times they take their own view, but generally that is correct that they follow AAOIFI and IFSB. So from that perspective, we can expect that most of the time the requirements of A, B, and C will be justified. We have comment from Brother Ghasim Mohsini. Assalamu alaikum. Having the Sharia capacity for the originator is mandatory. In Iran, no security is allowed unless it is Sharia compliant according to SEO's Sharia board, which is central board composed with qualified members. First, thank you very much and welcome, brother, for joining us. It's a great pleasure to have people from around the globe, and our representation from Iran and our collaboration with Iran has increased in regulators and others has increased in recent past, for which we are very thankful to you. A very warm welcome to you. The question is, number one, we fully endorse that the regulator has the right to define Sharia principles for the respective jurisdiction. So that is completely correct. We have not put the Sharia capacity as a requirement for this. We have put the Sharia governance requirement. So when we say that we have put the Sharia governance requirement, so that might be possible that you do not have the Sharia capacity yourself, but you may have the Sharia governance mechanism in a good Sharia governance mechanism in place. So for example, I am a normal entity. For example, I'm in telecom sector. I have a mobile business, mobile phone business, cell phone business. Now, what happens that I may issue a Sukuk. So this standard or AAOIFI's governance standard number 12 on Sukuk is not asking that you must have a Sharia board, but we are saying that you must have a good Sharia governance mechanism for the instrument, which means that that instrument must have a Sharia board for the Sukuk. So for our governance standard number 12 says that there should be a Sharia governance mechanism for Sukuk. Now, number two, if there are standardized requirements by SEO and standardized documents by SEO, then we understand that all the requirements are fulfilled. Now, there will be one question, whether these requirements are also complying with AAOIFI Sharia standards. Personally, I believe in 99% of the cases, it will be correct. So even a global rating based on this standard can be given. But if it is not possible and your SEO Sharia board has taken a view different from AAOIFI Sharia board with regard to some of the transactions, so then still it is possible to comply with this standard. But in that situation, you will be having a jurisdiction-specific Sharia compliance and fiduciary rating, not based on the global rating. But yes, we highly understand that most of the situation, the requirements will be the same, and hence a global rating will also be possible. And secondly, Sharia capacity at the originator is not needed. Some of the functions which are required in GS12 can be outsourced also. Thank you very much again for joining in, and thank you very much again for a very good comment and question. Brother Juma Muhammad, in our market, Sukuk and other capital market, just a suggestion to all participants, whenever you say our market, also mention which market you are referring to. In our market, Sukuk and other capital market instruments are at infancy stage. Although Islamic financial institutions have been allowed to operate, there is no legal and regulatory framework for these institutions. How best we can implement fiduciary rating of Sukuk and other financial instruments standard? Brother Juma, I'm not aware whether you are representing a regulator or you are representing the industry participants. But to the regulators, our suggestion is adoption of AAOIFI and IFSB standards can save your time. You do not need to reinvent the wheel. Actually, you just try to adopt the right set of standards. As I said, the last mover advantage is that you can learn from the experiences that are already done by people around the globe. AAOIFI standards and also the IFSB standards are developed based on the collective wisdom of the global experts. So from that perspective, it is always suggested that start with adoption of standards. You do not need to define what is Sharia. You just need to get the right set of standards and get it implemented. That is much easier. And if you are representing an institution, still I suggest that adopt AAOIFI standards on a voluntary basis, not only Sharia standards, but also the governance standards and also the accounting standard, as far as those can be allowed by the regulatory framework, in order to make sure that you comply at your end with the requirements. And then as industry, you need to convince the regulators that they come up with, they adopt AAOIFI standards. Now, again, I'll mention this thing that there are a lot of advantages of having standardization. The biggest challenge that you have is that your regulators may not have enough capacity to understand and govern and supervise and implement the relevant requirements on the industry. because of its small size and lesser capacity. The solution lies here. Also, we suggest that in smaller markets, also we suggest that the qualifications offered by AAOIFI and other international global bodies on Islamic finance should be made part of fit and proper criteria to help the industry develop in the right direction. And obviously, these qualifications are available globally, so people can always approach and get those qualifications from the global institutions like AAOIFI. Thank you very much, Brother Choma. Brother Yusuf Aliye, is it possible to find the documents and video? The video will be available on YouTube at AAOIFI's channel. All our new public hearings and even most of the old public hearings are available there. The second thing, the documents are available at AAOIFI website. Exposure drafts can be downloaded. The final standards cannot be downloaded, but they are free to read. Sister Manda again has a comment. Thank you for your response. Fully understand. For paragraph 148 and 41, we may consider adding or and depending on whether all factors are necessary to be met. Thank you very much. Well taken your comment. Inshallah, we'll take it to the working group. I hope we will do that. Unless working group has a view different from your view, in that situation, we'll try to provide a basis conclusion on that. Para 23A. Why we do this? We have this exception. 23A. Let me go back quickly to 23A. Yeah, the point is that if the institution itself is rated, then in that situation, we understand that the whole of the institution's instruments are covered by the rating agency. So I gave you example of Al Baraka again as a name. Now Al Baraka as a institution, as a group is for example having a rating which is satisfactory. Now they issued a equity sukuk, tier 1 equity sukuk, which is like, which is having underlying assets, which are the assets already within the investment pool. I'm just giving you an example. Now the point is that in that situation, what we understand is that once the rating was done under GS10, if it was already done under GS10, in that situation, we believe that the aspects of these instruments are already covered. Although these instruments are not separately rated, still the work is done. So in that situation, it might still be possible that they can issue and they can say that we have an instrument rating like this, or institution rating like this, so we don't have an institution rating. However, if you feel that it can cause a risk situation or something like, something bad can happen, please let us know so that we can take that additional angle also, because I can understand that you might be feeling some risk here. So if you feel there is a risk on that matter, please add it in writing right now here, or send to us in writing. Again, one thing to mention: any comments that are received in the public hearings and in writing are always taken to the working group. So even if I respond to you, does not mean that working group will ignore that. Working group will still have a look at this comment. So even if I responded to you based on the earlier discussions held in the working group or in the board, still working group and board will have a look at your comments again. Thank you very much again. Brother Islam Ahmed has suggested that before unsatisfactory, instead of reasonable, a marginal category may be included. I think I could not comment yes or no on that. We will just take your comment to the working group and see what they understand on that. Thank you very much. Brother Sayyid Imtiaz Abbas Hussain has made a comment. Okay, thanks to you. He has praised the presentation. So thank you very much, Brother Imtiaz, and thank you very much for joining in. Now I think we had some of the hands raised, although we are already a bit above time, and we have to request Sister Sabine also. Can you, Sister Alia, can you update Sister Sabine to be a panelist so that she can give some comments if she's available?
Yes.
Or Brother Fahim, or Brother Fahim if he's available.
Sure. 1 minute.
We have two comments very quickly. Two hands are raised. Brother Abdullah Abdi Brother Abdullah Abdi, please, if you can, can we allow him to speak, please? Brother Abdullah Abdi and Hafiz Atif Gulzar, these are two people. Can you please allow them to speak? Open up their mics. So
Yes,
Hafiz
sir.
Atif Gulzar, Brother Abdullah Abdi, you want to speak? Please go ahead. You are allowed to speak now. You can unmute and speak. Okay, maybe he's not available, or maybe it was by mistake. Brother Hafiz Atif Gulzar, can you, do you want to speak and put your comment? Then in that, okay, he dropped his hand. Okay, no problem. So I think we just wait. We just see for, okay, Brother Fahim is here. And thank you very much, Brother Fahim, for joining with us. We just would like to request you to put any specific comments that you may have quickly. And more importantly, you need to share a little bit of experience that you already have. Brother Fahim, please. I think you are promoted as a panelist, and I think you can switch on video and mic both if you like. Or mic only, as you like, depending on where you are sitting.
Okay, I can't do this. Can you hear me?
We can hear you, sir. We can hear you, sir.
Okay. So now, actually, ERA has done two very remarkable. In fact, on this standard, we have done the ratings. First of the Faisal Bank in Pakistan, where it is at that time when we were conducting the ratings on the standard, on the fiduciary standard, now the Sukuk will come in. However, the issue is that on the fiduciary side, we looked at every kind of a product and their issuances also, and we used your earlier what you call standard 10, and we have conducted according to the 10 standard. We have done the Rajahi Takaful also. So we have now gathered quite a experience in fiduciary and the product side. Now, as far as the Sukuk is concerned, since this is in work in progress, we had meetings. Actually, day before yesterday, we had meetings in TKBB in Istanbul, and we will be conducting some of the regulations and discussing the regulations in Turkey on this standard now.
Good. Brother Fahim, just another question. I know that you have been doing Sharia compliance and fiduciary rating, the fiduciary rating part, even before this standard. So can you just mention how many ratings were done on the fiduciary part before our standards, according to your own methodology?
Yes, actually, if you look at it, since 2009, ERA has been doing these ratings and we have done more than 45 ratings, and that is how we have combined the credit rating and the fiduciary score together, because we believe that if in an event when the Sharia compliance is not adhered to according to the AAOIFI standards, there could be a credit event. There can be a run on the bank, on the financial institution. So that is what we were. So we have done internationally more than 45, and they are all existing ratings. We have been continuing with our both the ratings up till now. So it has been now more than 12 years we have been doing this standard. But now AAOIFI's standard is very clear, because we have to go through every product also. So we look at every product.
Great. I think, Brother Fahim, actually your experience was actually one of the basis for, it provided the foundations for this standard and the earlier GS10. And we look forward towards working with you in the times to come, inshallah, as well. And we are thankful to you for this thing. And we look forward towards other rating agencies coming into this business and developing, these things in the times to come. I think that this is very, very sort of modest beginning, but this is something that has to become something big, inshallah, in the times to come. So let's
Inshallah.
hope and work together for that. Might be we will be looking for a roundtable of the rating agencies, in which we will be inviting you again to share your experience, inshallah. Thank you very much, Brother Fahim, for
Thank
being with
you.
us and for the support provided by your team in developing this standard itself. So thank you very much. I think
Thank you.
Brother Abdullah Abdi has raised his hand, but he has put some questions. So if Sister Alia, if you can provide him response in the chat window. Okay. With that, I think we need to conclude for today's session. Sister Alia, are we having anybody from BAP to give closing remarks, or we have to
No,
conclude now?
actually, we don't have any closing remarks from the partners.
Okay, then back to you. You can close now.
Thank you, Brother Ahmed, the Secretary General of AAOIFI. Thank you, Brother Fahim Ahmed. I would like also to thank our partners, Bahrain Association of Banks and UAE Banks Federation. Special thanks also goes to Islamic International Rating Agency for their support in development of the governance standard GS10 and this exposure draft. I would like also to thank all the attendees for your participation in this important public hearing. If you still have any question or comments, please send it to governors@aoip.com. Please check out our social media and AOP's websites in order to view the latest updates regarding the upcoming public hearings and events. Thank you so much, everyone. في أمان الله والسلام عليكم ورحمة الله وبركاته.
Assalamu alaikum.